workshops, they really ask, well, what is it exactly that you do as a counselor? So a homeownership specialist is here to assist families with their financial goals. We meet with families individually, review their personal financial objectives, tailor the conversation to their needs, and then we create a step-by-step plan to actually accomplish them. We continuously take education courses from national nonprofit agencies across the United States. We try to network with colleagues in other agencies that do the same type of work we do. HUD agencies, they're across nationwide. So if someone has family living in Nebraska, living in Alaska, there is a HUD agency similar to us. So we try to network, get the most up-to-date information. As a specialist, I know how credit works, how to improve it, what are lenders looking for in your loan application, what is the loan criteria, how to determine an affordable payment according to your budget. And so once you purchase, we continue to work with our clients even after that to make sure they can maintain the home ownership for the long term. We're a completely unbiased resource. We're here to assist our client to accomplish their financial goals. We're not like many other business professionals. We're really here simply for the client's success. And then HUD certification, it's a really, really great question that just recently started getting put on the news out there. So HUD approved housing counseling services is something that Congress actually recognizes as value, which is huge for us. Like the ones that we offer here at VCCDC to help families achieve and maintain homeownership, again, across the nation. So in response to HUD, develop a certification process to increase our knowledge as counselors and make sure that we have a full range of housing issues, information that are confronting consumers. So having the HUD certification gauges a specialist competency, knowledge in different housing related areas such as financial management, property maintenance, responsibilities of homeownership and renting, fair housing laws, and housing affordability. So essentially a homeownership specialist is here to have a full picture knowledge from start as a renter to end as a homeowner, and then even after that. So a lot of different topics here.
You guys do a lot. And I will say this, I loved how you said that you're here for the client's success.
Yes.
Now, earlier we heard from someone named Karen that actually went through the VCCDC program. And that was one thing that she assured that you all walked her, she said, basically hand in hand through the entire process. And that's so valuable. I can't even tell you how valuable that is because, you know, a lot of times you're afraid, I mean, are they going to give me some information and make me have to figure out the rest on my own? And so definitely appreciate you guys having that step-by-step process for everybody. I want to also remind everyone as we're going through this, please feel free in the chat to drop questions because Gabby is here to spill all the beans, all these questions she's been having. She's going to definitely answer them. And yes, if you're even considering home ownership at the time, but you're not sure if you're ready or not, Gabby is definitely the person that you need to speak to. Now, tell us a little bit about VCCDC's Home Buyer Education Workshop and why anybody looking into buying a home should actually attend.
So that's one of the courses I teach, and it's really getting the information from process. So we talk about the different steps. What should you do as a first step? We always talk about education as a first step. Getting to know your personal finances is really important to then be able to meet with a loan officer. So in that class, we talk about money management, how to budget, how does credit work, how to improve it, how to establish it. And then we have our lending section talking about what does a lender do? What kind of loans exist? What are the criteria to actually qualify for the loans, and are there down payment assistance programs out there available to help homeowners? We have real estate agents so that you know exactly how a rate agent is going to help you as a buyer. And we talk about insurance and making sure you insure your property. It's really important. You're investing so much into this, not just money, but you're investing yourself in the home. So you want to make sure it's protected. We talk about after the fact, once you become homeowners, there could be difficulties. Definitely seeing that now with COVID coming to fruition. I've had clients say, I heard about this from the workshop I took this many years ago, and now I remember what you were talking about. So we try to approach it as a full view of the buying process, not just how does a lender work or how do you get approved.
Okay, so we're going to start taking our questions now from people that are actually
Ask
watching.
away.
So again, please feel free to put your questions in the chat. I'm going to start off with this though. If someone does decide to have a session or begin the process with a homeowner specialist, that first session, I'm sure there's a lot of anxiety involved. I'm sure they're just like, you know, it's almost like going to a counselor for the first time. I'm going to have to tell you all the bad news, right? So what should people expect during that first session?
So I will say it's a lot of information that we cover in that first appointment, but it's really getting us a full view of the situation. So you come in with your personal documents, just like you would when meeting with a lender. We want to be able to review everything just like a lender would. Pay stubs, taxes, bank statements, your budget. We start by going over your credit in full detail. If there's something there that's really holding your score back, we are going to coach you through how to fix it, how to improve your score. Talk about the different loan criteria to make sure that if there is a certain barrier holding you back from taking that next step with the loan officer, we take action immediately. And then most important is the budget, making sure that A, you're saving in your budget, and B, we try to figure out what is an actual affordable payment that you can make so that you don't go into a loan officer's office and they set you up for a payment that's not going to work out for your family.
Right. All right. Well, this one comes from Elizabeth, and look, I want to know the answer to this as well. When it comes to debt, what debt should we focus on eliminating before any of the rest? Because you know we have priorities. We list them out. So which one should we get rid of first?
That's actually a great question. I just finished our Power of Credit class and our other live section, and that was the questions that were coming up is what do I tackle first? And it really depends exactly what the goal is. If it's that we want to improve the score, then we need to attack the one with the highest balance compared to the limit. So it's what's called the debt ratio. So that is 30% of your score.
Okay.
So if we bring that balance down, then we're going to be able to get into a position where your score starts to move. If it's simply that we just need to eliminate debt to make your budget more healthy, then we want to either tackle the one with the lowest interest rate or the lowest balance to just chip away at it little by little and allow now your budget to breathe from that debt. So it really depends on each situation, but talking about credit score, then we want to reduce the one with the highest ratio.
Okay. And you mentioned budget a couple of times,
Mm-hmm.
but how does that balance out? You know, how do I budget and improve my credit score at the same time? It kind of seems impossible.
And most often it can seem that way. And usually it happens when you don't have a budget written down. So that's really important is we want to figure out what your budget is. Where do you spend your money? So as a first appointment, that's the first thing you're doing as your homework at home is figuring out where do you spend your money. You're filling out a budget and then we talk in detail about that budget. Where do you go grocery shopping? How much is your grocery? How much is your gas? How much is your eating out? And then we try to see, is there any alternatives or any reductions? Can we eliminate Starbucks temporarily while we pay off that debt? Can we reduce the eating out so we can pay off that debt? So it's making these small changes so that we can apply more of our money towards that little burden that we have of the debt, reducing it, and then we can hopefully somewhat go back to Starbucks, but maybe now we'll be saving instead.
Exactly. You know, it's funny you bring up Starbucks because that was actually one of the expenses that Karen from earlier in our welcome ceremony, again, she went through your program and she said that was one of the things she had to cut out. And we don't realize how much a $4-6 cup of coffee every single day, possibly twice a day, that can really add up.
It adds up.
It definitely adds up. Okay, so this question comes from Jessica. And she said, is there any post-purchase assistance? And or if you can qualify for down payment assistance programs after closing.
So after closing, down payment assistance programs, not necessarily, just because it's to help you for your down payment. So you do have to do those prior to actually closing. get qualified, make sure that you can apply the funds towards closing and or down payment. After you purchase, there are, for instance, we can help you in budgeting because you have a maintenance issue. So again, the budget is the foundation of a household. And so if we're trying to get a new roof, then we might need to save, and we have to go back to the budget, see again what we can cut out, and try to set those funds aside. Part of, again, the HUD certification is having knowledge of home maintenance. What are the expenses? Insurance, can certain things be covered through insurance? So we have some knowledge of that. If you have a home warranty, that's a huge thing. When you're purchasing at first, having a home warranty can help cover if your boiler all of a sudden goes out. A home warranty can help you pay for that versus having to buy it out yourself. The same thing with plumbing, leaks, home warranty can definitely help you. So after the purchase, we're definitely also a resource to kind of bounce off ideas and get information. I think that's such an important part, is making sure you're informed of what your options are.
Gotcha. All right. This one says, I have zero credit. How can I raise my credit score? What are those steps?
So the very first step is we have to open some kind of account. If it's that we have no credit because we have collections, we're going to have to take action on those collections, because that will hinder us from being able to open new accounts. Probably an easy way to do it to get positive information on your credit is being added as an authorized user on a family member's credit card. But you want to make sure it's a credit card that they make sure to stay on time with. Payment history is so important, and keeping that balance on the credit card as low as possible. So that way you have all that positive information on your credit report, and now you'll be able to open your own card based on their information. Again, if we have collections, we want to take care of that, so that way we can not have that be a hindrance and once you apply. So authorized user, secured credit cards are also another option. And that's where you're going to a bank, you put your own money down as a deposit, and now they issue you a credit card of the same limit as your deposit, and you're using it just like a credit card. It's reporting on your bureaus, everything will start being positive.
And quick question about the secured credit cards. Is it better to go through a bank to get that? Or because I do know that you can apply to some online, but you never know which ones are trustworthy.
I always recommend go to the bank, because secured credit cards normally have startup fees. So you want to be able to check the startup fees on where you're going. Interest rates will vary. There will be interest on this card. So you just want to make sure you are viewing all your options and getting the best choice for you.
Okay, gotcha. So what type of employment and work type requirements are there to qualify to buying a new home?
So lenders will look at your employment history for the last 2 years. So you want to either have been in the same type of work or at the same company. So let's say you're a nurse and you're switching from one hospital to another or to a private practice, but you're still a nurse. You're still in the same industry. You've just switched a few times in the last 2 years. Perfectly fine. They'll be able to do a verification of the different employers you've had, connect the timeline. Yes, we have 2 years. If you're at the same company and you started off as a forklift driver, moved into management, now moved into a totally different department, but you're still at the same company, also the same, you should be able to get approved as long as you have a 2-year history.
Okay. We're back on credit again. Besides the card that you mentioned earlier, is Credit Karma a good assistance when it comes to building your credit?
I actually use Credit Karma myself. I recommend it to clients. I do, not because of the score though. The score is not going to be the same as when you go to a lender when you're applying at a store, because they're using what's called the Vantage score model, and everyone else pulls FICO model. But you are able to monitor your credit through Equifax and TransUnion, so at least you'll connect with 2 out of the 3. So if something negative pops up, you're going to be able to see it. If they also give you tips on, hey, this credit card is looking a little negative, you got to bring the balance down. They'll let you know when something negative has updated, like a late payment. So it actually is a good service. It's a free service. Avoid the new credit card offers unless you absolutely have to have the credit card because you're building credit. But that's something I always tell my clients, don't forget, avoid those offers that they're sending you. That's part of the reason why they're free service, is because they're sending you these offers.
they do start flowing in the mail, it's like all of a sudden, it's
They
like
do.
access. Yeah. Is there a certain income that you have to purchase a new home?
If we're talking about down payment assistance programs, there are certain limits. For the low-income families, it depends on the household size. There's a limit according to the county. Then there's also other programs for moderate to high income. The program is called Cal HFA, California Housing Finance Agency, and they're not based on a household size. It's just a set limit of income of $194,000. So just depending on the assistance, there is an income limit. For loans in general, there's not an income limit for most programs. There are more purchase price limits. So for instance, a conventional loan, there's a conventional and then a jumbo conventional. And there's that limit that's imposed to distinguish the two of what your purchase price is. Same thing with FHA, they can only go up to a certain amount of purchase price, but income really isn't one of those criteria for that.
Okay, good to know. Wow. I am learning so much today. Look, I tell you, every time you think you have all this knowledge, God puts me in front of people that's like, you need to listen to me. So I'm soaking it all in. COVID-19 hit me hard. Here's from one of our next viewers. COVID-19 hit me really hard. Are you all providing any type of resource for those struggling because of COVID-19?
We try to recommend clients to reach out to the county. And the reason being is the county has funds that may have been provided from the state, from FEMA. I know here in Ventura County, we were given rental assistance to our county so that if you were a struggling renter, you fell behind on it, you have some assistance there that you can apply for. We have a 211 service nationwide. So if you need assistance for groceries, connecting with your local food share to alleviate that burden from your budget, connecting with them so you can find out the closest center to get the food. So we try to see what's out there. COVID has been a huge part of life right now. So trying to keep up with all the changes, all the news, we try as our best to make sure we do. When it comes to mortgages, we're on different webinars with actually FHA, seeing what kind of programs are protected by the CARES Act. And so we just try to help homeowners navigate that process through their mortgage. And then on the renter side, just checking any changes with local nonprofits, might be offering some other services, our county, our city, and seeing what's actually available out there.
And what about bankruptcy? I know that bankruptcy usually stays on your credit for a certain amount of years. Does that affect approval chances?
It does actually, depending on what chapter you filed. So the most common is Chapter 7, Personal Liquidation of Debt. If you're trying to apply for a mortgage, if it's an FHA loan, they're going to ask that you wait 3 years from the closing of that bankruptcy. If it's a conventional loan, they're going to ask that you wait 4 years from the closing. So it does differentiate you between programs. And then the most important part of bankruptcy is actually reestablishing credit if you didn't keep any of your accounts. So we can't have a score unless we have something reporting. So we want to try and get some kind of credit card activated. And again, managing that credit card as positive as possible will be the most important part after bankruptcy.
Okay, great. Diana says, I've been trying to get my family to budget. It's not working. Can you help me with first steps?
I'm struggling to get my husband on there. So it is an issue to try and get the whole family together. The most important thing is telling, for instance, children, telling your kids, why are we no longer stopping at McDonald's? Why we're not going to Starbucks anymore for that hot chocolate? Getting them involved. Like Karen mentioned on our welcome ceremony there, she got her daughter involved and she was able to know why they weren't having sushi dates anymore. I'm trying to get my husband to understand that part myself. But getting started, it really is figuring out what method will work for your family. You want to try and track expenses that you don't have a bill for. So your groceries, your gas for the car, your eating out, those are things that will vary from month to month, but we get a bill for our rent. We get our utility bills, our cell phone bills, Netflix. Those things we know how much they are per month, but we want to try and track eating out, groceries, gas at minimum, and see, if we avoid going down this route on our way back from work, we're going to avoid that potential Starbucks spot. We're going to avoid that McDonald's. We're going to avoid some eating out. So we want to just try and figure out where you're going, where you're spending your money, and trying to figure out what is an alternative to that. So methods to tracking expenses. Some people look at their debit card and their statements at the end of the month, and they start to jot down, okay, this is what I spent last month. Others keep a notebook in their car, in their purse, and as they make their expenses, they write it down. So that way for 1 month, it's really an exploration of what are we doing, so that in month number 2, we try to target one of those expenses. Okay, this is my plan of how I'm going to reduce it. And when we're talking about partners, it's really having that conversation together. You can't have a conversation by yourself if we're on a plan together. So it's having that method that works for one, a different method that will work for the other one, and then coming together to share that information.
And a lot of prayer. Okay, we have just a couple more questions. Christy says, should I pay off all my student loans before I even consider buying a home?
You don't necessarily have to do that. That is a huge thing right now that I get all the time. I get that question from my clients, from our workshop participants. I have student loans. I keep hearing, I'm not going to be able to buy. How much you owe is not necessarily what's going to hinder you from purchasing. It's the minimum payment required. Currently, right now, with the CARES Act, student loans, federal student loans were placed on forbearance automatically. So on credit, it's going to show a zero payment. When a lender sees a zero payment, they're going to ask you for proof of what your minimum payment is, or if you're on an income-based repayment plan and that's what your payment is zero, they're going to have to look at the program guidelines. So FHA, conventional have different guidelines, and conventional will accept a payment plan. If your payment is $25 minimum, they'll accept it. If it's $100 minimum, they'll accept it. But FHA will look at the fully amortized payment, and if it's an income-based repayment plan, they'll actually take a percentage of the total balance. So it really is working with your loan officer to see which loan program will benefit you when it comes to student loans, and still trying to get you an affordable payment and into a purchase price. So student loans don't necessarily hinder you, but it's just looking at the different program guidelines.
Which is great information because, again, when we don't know, we just do what we think is best. Again, I keep referencing Karen from earlier. Her story was amazing. You know, she took all of her savings that she was going to use for a down payment. And instead of using it for, part of the down payment, she was like, well, let me just pay off all of my student loans. And that may not have been the best move at the time, but it worked out for her, right? But that was what she thought would be best. Again, that was before she came to VCCDC. Okay, got the correct information. So
often mine says, let me just pay everything off. But if you got a degree as a nurse, it might be a lot of funds to have to pay off. So I want to look at all the options.
We have another question from Jessica. Thanks, Jessica, for Jessica's getting all the information today. She said, back to COVID help. Mm-hmm. Have you heard of any help that is being given to home buyers like they do for renters?
So the assistance for homeowners is under the CARES Act. Because of the CARES Act, there were funds that could be distributed to counties as well as through FEMA. But for home buyers, I actually have not heard of an assistance program yet, except for what we all know, because of COVID, interest rates are low. But as actual assistance, down payment assistances are still there. They still exist. There's still funding for it. So it's just a matter of connecting for those programs with the different banks to see if they offer programs like that. But actual protection from CARES Act for home buyers, unfortunately, that was not included as part of it.
Good information. Wow, that's interesting. Well, I'm telling you, this COVID thing has just flipped life upside down.
It has.
It's very interesting, and kudos to you that have to stay up on all the new, new offers and this and that. I mean, there's so much, I'm sure, research, and I'm sure everything is changing every single day.
So, yes, it is.
Don't forget, if you have any more questions, we do have a few more minutes with Gabby. So if you have any questions, please submit them in the chat box so she can answer them live. Now, I love this question because I just learned this and I've been messing up all of these years. The question says, how much credit should be used on a credit card before it begins to negatively affect my score? Because I thought I can run the whole thing up as long as I pay it off and don't, get knocked with late payments and so on and so forth.
Mhm.
But my score was going down and I was confused.
Yeah, so 30% of a person's score is made up of how much do you owe on your credit card to compare to the limit. So you want to actually keep that percentage as low as possible. Less than 30 to 40% of the limit is what you want to charge on there that's a key thing, at any moment of the month. Every credit card has a different reporting date. So while one credit card will report on the 5th of the month, another one could report on the 20th of the month. So you want to make sure that any moment of the month that it reports, it's going to have that low balance. And so I have a lot of clients that use the credit cards for points, for rewards, and they charge everything under the sun. But the negative impact from that is if that card gets reported before you make your payment, then for that 30-day cycle, that's what got reported. And if I pull your credit or a lender pulls your credit during that time, then that's the balance that's we're going to use to generate your score. So you want to make sure at any moment of the month, never charge more than 30 to 40%. And I always tell my clients, pay off your credit cards when that bill arrives to avoid interest.
Yeah. Okay. Well, you were mentioning pulling credit. Who all can see my credit score? I need to know this. Public information?
It's not public information.
Oh.
However, companies do request lists of potential clients to send them offers. So that's why we get offers in the mail. And what they're getting is a list of the low risk clients or mid-risk clients to make those offers. High risk is people usually with the bad credit, so they're not getting those mailers in. So they're not going to give you your personal information, they're not going to see your score, but the bureaus do give them the low and mid-risk list of clients. When you pull your credit on Credit Karma or when you come to our office, we're doing a soft pull. So through your credit card included, if you're viewing your score, it's a soft pull, so it's not going to have an effect on your score. You'll be able to view everything, verify your information. When you go to a lender or a store and you're applying for a new account, that's what's called a hard pull, and it does actually bring down your score. So we want to try and avoid those as much as possible, and then just always review your own credit report through sources like Credit Karma. The actual credit bureaus themselves will allow you to review it, and if anything pops up that's not yours, they're confusing you with someone of a similar name, you want to fix that immediately
And
before
tell me
any
one more
issues.
time the difference between a hard pull and a soft pull.
So a soft pull is you yourself doing it with no intention of opening a new account. So you just want to review it. You want to make sure that things are accurate on there. A hard pull, you're actually trying to open an account. This includes actually a cell phone. If you apply for a cell phone, they're going to pull your credit to see if they can open a new account for you, or if you're getting a new cell phone financed through the company, they'll pull your credit and it actually brings down your score and it will show up on your credit report. So those do bring your scores down because we're trying to open a new account.
Look, first of all, I'm like, that's so unfair. So is the thing about you giving me a credit limit and I can only spend 30% before. Why did you give me this limit? It just doesn't make sense to me, but it's great. It's great to have the knowledge. And thoughts on transferring balances, So we normally will, like you said, we're getting these mailers. And let's just say I have a balance on a high interest rate credit card, but I just got this one in the mail, 0% interest. You can do your transfer, your balance over to this one, and 0% interest for the next 6 months to a year. What are your thoughts on that?
It depends on when you want to purchase. Because typically when you're opening a balance transfer credit card, you're going to almost or pretty close max it out with whatever you're transferring over. Usually they try to limit how much they provide to you as funds available to whatever you're transferring. So if you can imagine transferring that full balance to its maximum of $2,000, we're going to have to work on bringing that balance down so that your score can go back up, because it's going to get hit hard by that maxed out card. So if we're trying to buy in the next 6 months, I don't recommend to open a balance transfer credit card just yet, because you're running your credit. So that's an inquiry. It's going to bring down your score. And then we're potentially maxing that credit card off to the top. So if it's something that you have in mind to purchase in 12 months, 18 months, then we can work on reducing that balance now. You get to take advantage of no interest on this new balance that you probably had a really high interest rate on from another store or another bank. But at least we're giving ourselves a little bit of time to bring that balance down and have our score recuperate.
Gotcha.
So it just depends on the action that we're trying to do.
Have you ever had a client that had their credit stolen, or, and how does that affect, even the thought of purchasing a home?
I have actually. I've had a client come to me because they had fraud on their credit. And I had another client who I was working with, and in between us working, they had fraud. So one came from the beginning because of that. Another one, we were working, everything was going great. All of a sudden, these credit cards popped up. It unfortunately is something that's becoming more common. I hate to say it, but the most important part is that you actually review your credit report to catch it sooner than later. The particular client that had come in because they had fraud, it was something that they realized 3 years later, they had no idea. They moved from one address to another, and then all of a sudden they just had no idea what was going on. So most important thing is you have to file a police report, contact that creditor, notify them, hey, I never opened this account. I um, have this police report as proof that I am declaring this is not my account. Typically, you'll see on a credit report, the account gets open, it gets charged to its max, and then there's never a payment history. So that's one red flag that we can see, is it got used and not a single payment went in. It's so important to review your credit to avoid those kind of things from happening. It doesn't have to be a credit card. It could be IRS fraud. I've seen that before, where someone tried to file their taxes and all of a sudden there was someone else that had filed it already under their social. Wild stuff happens. So yeah, it's just so important to make sure you review your credit as this first indicator. IRS filings is really uncommon, but credit is really, really important.
So besides reviewing our own credit,
Mhm.
I guess what other precautions can we take to attempt to avoid getting our credit stolen?
So I have had clients that freeze their credit. So if they're not planning on opening new credit cards, they're not trying to apply for a mortgage just yet, they know what they need to work on with their accounts, they'll freeze their credit with each bureau to make sure that nobody can access it, nobody can pull new accounts, inquiries, and they just work on their debt, because that's the main focus, is bringing down their credit cards. It avoids them from being able to open a credit card too.
Yeah.
So that's one method, is freezing your accounts. You can also, if you've been a victim of fraud in the past, you can put an alert with each credit bureau to make sure that when a new application happens, they can call this number first to verify, yes, you are the one opening this credit. And obviously if they call the number, you're standing right in front of them. But you can put an actual fraud alert on your account.
Okay. You mentioned freezing your account. While the account is frozen, I'm assuming your score cannot go up or down. It's just
No, it is still fluctuating because the bureaus are still, or the creditor is still updating the bureaus with your credit card balance, your payment history, all that stuff. It's just no new credit can be opened. So
got.
nobody can pull your credit report.
Okay, that makes sense. And then you also mentioned bureaus, and one thing that I've never understood, there are three
That's right.
experience there are three credit bureaus. Honestly, when I look at my credit score, I just go with the highest one, so it makes me feel better. But why are there three different ones, and which one means the most? I guess really.
Yeah, so there's Equifax, Experian, and TransUnion. Those are the three credit bureaus that we have here. Why we have three? That's a great question. I've never been asked that before. But what I can tell you is that each company does get different information reported. So your scores will be different between each bureau. It's not that they're using any other information that the other isn't. It's just their equation is just particular to them. So that's why there's a fluctuation, as well as your credit cards. They don't necessarily have to report to all three. Your auto loans don't have to report to all three. So if you have a credit card that only reports to TransUnion and not the other two, you'll probably see your TransUnion score either be higher, or if you have a really high balance on that credit card, it's probably going to be lower. So it's just a matter of making sure to view all of your accounts, make sure they're all positive standing. Which one is the right one? It depends where you're going. If you're meeting with a mortgage lender, they're going to pull all three. They'll eliminate the highest and the lowest, and whatever the middle score is what they'll use. If you're applying for an auto loan, they're going to probably pull Experian or Equifax. It just depends on each company, and they'll pull one in particular. Same thing with stores. They'll pull one bureau in particular that they have a contract with, and then that's the score they'll use. So it is particular to each company.
Okay, makes sense. But I still just, again, I just look at the highest.
We'll use it the highest one. It makes us feel better.
It makes me feel so much better. If somebody asks me my credit score, when I'm checking all three, I'm like, oh, I'm not going to average. This comes from Albert. It says, we were going to set an appointment to see how our finances look, how much we can be approved for on a loan and down payment assistance. But since COVID hit, my wife, who is self-employed, hasn't been able to work, on unemployment currently. And now our take-home amount is down, like many people today. Both our credit scores are good, 740 range. Should we hold off until our finances are back up, or still set an appointment with VCCDC? Says, thank you, sorry for the long question. Albert, we appreciate it. We needed all the explanations. That's a really great question.
And it's a common situation, unfortunately, we're seeing right now with the reduction of income. A person who's self-employed, the lender will look at their taxes, their Schedule Cs. And so the most important thing is that you're still working. So, you know, there's different self-employed clients that weren't hard or impacted as hard. For instance, gardeners. I have a client who actually does pool cleaning, and they're still going to work. So for a self-employed person, it is important that you still have that income source. If you work for a company, you know, what's called a W-2 employee, we want to make sure you go back to work if you're on unemployment first. So we don't want to put you in a bad situation where, let's say, yes, we can do a pre-approval now that you're on unemployment using your other income, but then what happens if you actually purchase? You're not going to have that actual income source from your job just yet, and then you're going to be put in a bad situation of having to make that mortgage off the bat. So that's why it's so important right now during COVID. Loan specialists or the banks themselves are really making sure that income sources are secure, you're back at work, you're bringing in that self-employed income, so they'll ask you for the profit and loss statements. Obviously, maybe the beginning of the year we had those losses from the start of COVID, but now things are slowly getting back to normal. So we do have that source of income now. We have the 2 years of taxes, W-2 employees back to regular full hours, and they're going to just want to make sure that income is secure.
If someone is on unemployment, like he just mentioned, does that have any, will that affect, let's just say they decided to move forward anyways, right? Does that affect your interest rate at all? Or
well, we won't be able to get pre-approved until you're back at work. So because unemployment isn't secure, it's temporary income, they can't necessarily use it right now to get the full pre-approval, but you can probably have that conversation with the loan officer to talk about, okay, if I go back to work regular 40 hours, here's my paychecks prior to COVID, this is what you might be looking at for purchase price. But they won't actually be able to move forward with their purchase until they're back at work.
Okay. And then last but not least, can we talk about refinancing? Can you give any advice on refinancing? Because there are a few people here that are already homeowners.
Hot topic right now with the interest rates.
For me too. I'm in the middle of some stuff going on for myself. The interest rates are a lot lower than they were before. So can you give us some information on refinancing?
Yeah, so the important thing with refinance is making sure, A, you haven't been late on your mortgage. That's a huge thing, especially right now with COVID. Um, if you were in a forbearance, then there should not be any late payments reported. Because of the CARES Act, we have that protection. So they'll look at the last 2 to 3 years of payment history, make sure everything's good, you've been on time, and then you want to make sure that what you're saving in your payment is going to be more than what you're paying for the refinance, because refinances have fees from the banks. So it's a matter of how much are you going to save on your actual payment and how quickly are you going to regain that back. So let's say our payment drops by $300, but I had to pay $8,000 in refinance fees. How long is it going to take me to recuperate those $800?
Yeah.
And in a general sense, most say that if within 5 years you're going to recuperate that money in your savings, then it would be a good refinance. Trying not to extend your loan again to 30 years because that's more time with interest. So trying to keep the same time frame that you have left is also one of the other factors to look at. But if you purchase with a high interest rate, or maybe you purchase with the FHA loan and you want to now go into a conventional loan without mortgage insurance, so you're going to save that money, that could be also a good move.
Okay. I told you all, if you are even, I mean, if the thought has even crossed your mind about purchasing a home, Gabby is definitely the person you want to talk to. You cannot stump her on a question. Okay, I think we have one last minute question that just came in. What is the average cost to refinance? Okay.
That is actually a tough question. I'm not a loan officer myself, so I'm really here more on the preparation and understanding the procedures and how it works to purchase, how it works to refinance, how your credit works. So the average cost is a tough question for me to answer just because I haven't seen those fees myself. However, we do have in our exhibitor booths plenty of banks there, and then you can ask them, what are the fees for refinancing roughly, and you can do that comparison. So important part of refinancing is shop around. Same thing with the home purchase. Shop around, make sure you get the best rates, the best assistances possible, looking at all your options.
And to reiterate, yes, please make sure you check out the exhibitor booths. You can actually virtually chat with those banks. They're available to answer all of those type of questions. Let's see. Oh, look, now all these questions are popping. Okay. Let's see. Oh, no, that was Albert just saying thank you for the information.
Oh,
Shared with him and his wife.
of course.
I appreciate you as well. So again, Gabby is definitely that person. Her and her team from VCCDC. She is the lead home ownership specialist. Now, let me ask you a question. If people are wanting to connect and sign up for the counseling, how do they do that through VCCDC?
So we just recently started doing our appointments online. And so you can visit our website at vccdc.org/app to be able to schedule an appointment. Either the appointment can be with me in our counseling, or you can also schedule with our loan officers there. If you know you're ready to purchase and you want to get your options reviewed with them, you can schedule directly on there. If you want more information on exactly what does our counseling entail, give us a call, shoot us an email through our contact us at vccdc.org, and we're here to help you guys out in any way we can.
See, there you go, you guys. There's no excuse. You don't even have to leave your house. Everything is virtual. You can ask the questions you've been dying to ask, get the information, and start your process just simply by logging on. So, Gabby, thank you so much for being
Thank you.
today. You have a gift of making everything very clear and easy to understand. And I think that is very important when it comes to, this is such a intimidating process. And when somebody talks over your head, you're just like, forget it, I'll keep renting. But I appreciate the fact that you can break it down and make it into layman's terms. And I'm sure there are people watching today who have just gotten a little boost of, I can do this. And they're going to be reaching out to you very soon. So thank you so much.
No, thank you for having me here. I'm really excited. So.
changing lives. You're changing lives. You guys, don't forget our next breakout session is going to start right at 1:35. So you don't want to miss this next one coming up. Again, we'll be right back here live at 1:35. Go run to the restroom really fast, grab you something to drink, get back in front of your computer, and let's learn some more. Thank you, Gabby.
Thank you. Bye, Ryan.